Tushar Mahajan, Head of Derivatives with Nomura India, joins us live. Tushar, good morning. Thank you for joining us. Tushar, it's been a quick ride for Nifty from 5,200 to 5,900. Do you think in the short term this is as good as it gets, or since the brute force of liquidity is so strong, one should not draw lines?
No, I think for the short term, we are probably done with what we've reached in the, in this huge rally that we've seen over the last 2 to 3 weeks. Not to forget that we have a big event coming up tonight and day after, tonight, tomorrow, and then later this week with the RBI governor's maiden policy meeting. So I think that's the other key risk. But having said that, the kind of indications that we have been getting from FOMC and the Fed Reserve, I would tend to think that, this is where it lasts, and, we could probably now shift down back to the 5,700, 5,720 odd levels.
Tushar, hi, morning. What about volatility, and how long would we have to grapple with it? Because the value of the India VIX is still pretty high. Last time when the Nifty was at current levels in July, the VIX was at 1617 as opposed to currently 2930 thereabouts.
That's true. I think for a very long time we have been operating in a low vol environment where, with the VIX trading as low as 13, 14 till not too long ago. And then we saw the spike. This was primarily driven by the change of, sentiment in global liquidity towards emerging markets. And then, all those people who had shorted options, they had to kind of come in and cover, which led to the spike in volatility. For the moment, it looks like it's stabilizing around the 30, 29, 30 odd levels, with a tick here or there. But I think we have to live with the fact that, at least in the short term, we could continue to see these levels continue to stay here. Post the events which pan out globally, in light of whatever the Fed Reserve says tonight and day after, and also locally with how Raghuram Rajan pans out his maiden speech on monetary policy. I think from there on, as uncertainties around these two things begin to taper out, you will see the VIX kind of slowly grind down its way back to maybe the 23, 24 odd levels. But I don't think we are in a rush to get back to the 14, 15 odd levels. And I think on the upside, we post these events, we don't see that going up again to the 35 odd numbers again. We'll probably grind down to the 24, 25 odd numbers.
Tushar, the events will get over this week. One gets over on Thursday, the other one gets over on Friday. What happens next week then?
Next week is the futures expiry, and I think that's going to be determining the action per se. I think given the way the positions are set up, given the way, people have been trading, you could see a fairly interesting next week as well, where you could probably see the markets, on the downside take support around the 5,700 odd levels, like I said earlier, and the upside seems pretty capped at 5,900 for now.
Do you think in the short term, we may not go back to levels of 5,200 or 5,300, or that is a level, or that is a number which still cannot be ruled out?
In the short term, I don't think we are headed to that stage. I think, I would tend to think that you will see people turning buyers around the 5,500, 5550 odd levels. I think when we went down to the 52, 5300 odd levels, it coincided with the massive panic situation in India, and, especially if I may use the word run on the rupee, so to say, that's where it coincided, and it just seemed like, there was no stopping the rupee. We've made successful attempts at, stemming that kind of a move, and I don't think that panic situation is anywhere around the corner again, which could let the Nifty go back to those levels.
Tushar, the one space which has held out has been the banking pack. This series, we've already run up a good 16% on the bank Nifty. How are you approaching trade there now?
Well, I think it was also the biggest hit in the months of July and August as well. So, there was some kind of outperformance which would have been expected in the Bank Nifty. The Bank Nifty, if you look at it, made its moves first based on short covering, and then you saw this massive buying coming in on the private sector banks. I think Bank Nifty, given the way its weightage is, weighted, and given the fact that it is more weighted towards the towards the private sector banks, I would tend to think that, 10,000 probably continues to be a good level on the Bank Nifty, and, we probably just see the level break maximum to 9,900 or something like that. I don't think we're going back to those earlier levels, much in line with what I just said, that, I don't think the Nifty is going back to the 5,300 odd levels. But within the banking space, as say, not as constituents of the Bank Nifty, but within the banking space as such, I think there continues to be pain on the public sector banks. We haven't seen them participate as much on the move up as compared to what the private sector banks have done, and I think that is a trend which will continue to be there.
Tushar, IT is getting a little bit trickier. Stunner of a series last time around, but this time each day the market rallies, you see some profits being taken off. What does one do?
I think IT has become the new consumer sector. It's become that defensive pack which kind of tends to move and provide support to the markets when it's kind of cracking up, and, tends to book profits on the days when we've had good days in the markets. And I think that's a trend which will continue, especially given that currency markets are again driving so much sentiment in the equity markets, and amongst equity plays, IT and pharma are probably the two best sectors which are good currency plays, so to say. And I think that's something which will continue to be there today. We've seen the rupee kind of depreciate again today, and consequently we've seen that trend reverse in the IT stocks as well, which are trading relatively strong today on a relatively weak day. So that correlation in the short term, I think, will continue to be in the markets.
Tushar, let me bunch two questions into one. Give me an absolute trade, B, followed by a hedge trade.
That's an interesting one. I think the hedge trade is definitely what I spoke about earlier, which is in terms of private sector banks, long the private sector banks versus short the public sector banks. I think that's a trade which we've been continuing for a while, and we don't think that trade is reversing anytime soon per se. I think on the absolute space, I would probably like to continue to trade with the metals pack, given the rally globally in metals, and within that space, we could probably build up a basket of stocks, including Tata Steel, JSW Steel, and Hindalco. That kind of covers both the ferrous and the non-ferrous space, and I think that's a trend which that's a trade which will kind of pan out well.
Tushar, Tata Steel has reversed, and Tata Steel has reversed almost 10% from the recent high. The recent high was 315. As we speak, it is at 286.
Well, it also rallied up, Nikunj, fairly strongly, almost from 200 odd levels to 315 in a very short span of time. So this kind of a move down is probably expected, but I don't think, for an investor who's probably holding up a position over a 2-3 month odd period, that there's anything to worry about too much. We could probably see Tata Steel break out of its recent highs as well in the near future, given the way the commodities continue to rally.
What about pharma then, Tushar? Again, pretty diverging and contrasting moves coming in there. On one hand, you've got a Ranbaxy, on the other Cipla or a Dr. Reddy's.
I think pharma is, the next derivative of the currency play, beyond IT. IT is probably a simpler sector to understand, a simpler sector to dissect. Pharma has its own quirks, but I think it's just a derivative of the INR story. Ranbaxy obviously is a very specific case. If you get the FDA approval, FDA issues, and all the build-up which was being priced in the stock price movement of late, I think that got taken away in a single jolt, and that's where you saw the stock correct massively the way it did yesterday. So stocks which have these kind of issues, we've seen that in the past with Wockhardt as well. The stock had a massive fall from over the 1,000 odd levels, 1,200 odd levels to almost 600 in a short span of time. So I think pharma is a story which the relatively simpler players, maybe the likes of Dr. Reddy, Lupin, Cipla, they are probably the better place to play, just as derivatives of the currency market, and, names which kind of continue to be under the scanner of the FTA, like Ranbaxy and Wockhardt, are names which you could probably stay away from.
Tushar, appreciate your time and thank you for joining us.